Hello, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, June 17th, 2024. Well, last week, as we previewed, was a very eventful week in terms of economic data that came out. Of course, the headliner was inflation. So that is the focus for investors. That certainly earnings growth from S&P 500, but it is inflation and what the Fed is going to do. So last week was a really good week in terms of inflation news. So we'll start off Wednesday last week. We had the FOMC meeting. They probably already had this data, but they stood pat. They didn't do anything and didn't say anything of significance. So that's on the side. However, during the day on Wednesday, we had inflation releases. We had core inflation or core CPI and CPI, and that came in really well. So inflation month over month was expected to come in at positive 0.1 for the month of May, but it came in flat. Then the core inflation rate month over month was expected to come in at positive 0.3, but it came in at 0.2. So the levels now on a trailing 12-month basis, core inflation up 3.4%, inflation, the headline, up 3.3%. So that was really good news, both for the stock market, but particularly for the bond market. We'll see that when we look at the returns from last week. But then on Thursday, following that up, PPI and PPI core came out, producer price index and producer price index core, and that actually came in better than expected. So PPI, the headline number, was expected for May to be up 0.1% month over month. It came in at a negative 0.2%, so very strong. And then core PPI came in at 0.00, and it was expected to be up 0.3% month over month. So inflation, very good news last week. And again, we'll look at the market response to it, but it was very strong. Lastly, and this is a disappointing number, Michigan, their consumer sentiment number. So the expectation for the month of June, it was going to come in at 72. This has been on a bit of a downward slide here. So consumer confidence clearly waning. It was expected to come in at 72, but came in at 65.6. So that is negative for sure. Now, after that data last week, markets responded very positively to it, but the Atlanta Federal Reserve still expects for the second quarter ending June 30th, U.S. GDP growth to be really strong at positive 3.1%. So they actually moved up their estimate last week from 2.7. Now, one of the bigger movements in terms of the data that we look at on a weekly basis, we always look at the inflation expectation over the next 10 years, 10-year Treasury minus 10-year tips. And over the last 2 weeks, that has come down significantly. So 2 weeks ago, the expectation was we would average 2.35% inflation over the next 10 years. Over the last 2 weeks, that has dropped now down to 2.17%. That's near the lows that we've seen for the entire year, and actually going a year prior. So inflation expectations definitely receding with the economic news that we got last week. Now, in terms of the Fed and Fed funds and their movement on that, last week again they announced no change. Now, the expectation for the next Fed meeting, which is in July, it's July 31st, end of the month, expectations changed just a little bit. So the expectation of no cut whatsoever, that actually dropped a little bit. It had been at 91.1% the week before. It dropped to 89.7, so a 10.3% probability of a 25 basis point cut at the end of July, so probably not going to happen. But the end of the year, those odds did change as well, so the expectations are now rising a little bit. Again, coming into this year, investors had expected 6 rate cuts, and then it was more like 1.5, and now it's closer to 2 at this point. So the odds now at the end of the year of no cut at all, 2 weeks ago, that was at 14.6. That dropped down to 5.7%, and the odds of at least 2 rate cuts between now and the end of the year, that moved up from 45.5% the week before to 64.6% at the end of last week. So with that very favorable inflation number, markets responded very positively. S&P 500, U.S. equities up very strongly, up 1.62%. Growth and large cap particularly outperformed last week. So now we have the S&P 500 up year-to-date 14.6%. Very strong. In terms of international, actually developed markets ex-US, very poor week, down 2.56%. So now on a year-to-date basis, that index is only up 2.7%. Again, juxtapose that, compare that to the S&P 500 up 14.6. Emerging markets actually had a decent week, better than zero. It was a positive 0.35%, and a little bit surprising in that China was negative on the week, at negative 1.38%. China, again, represents over 25% of that index. So, fixed income last week. This was the biggest rally we've seen this year. I think late last year we might have had 1 week that was better, but this was really strong, very positive. 2-year yields dropped 18 basis points last week. 10-year yields dropped 21 basis points. So for the week, the Bloomberg U.S. Aggregate Bond Index rose 1.3%. And now that makes it on a year-to-date basis flat, up 9 basis points. That's a very powerful move. And long government bonds, the long government bond index, we don't invest in these, but just for comparison, that index was up 3.1% last week, but still down 2.44% for the entire year. So both stocks here in the U.S. and fixed income responding very positively to what was very good inflation news. Now, let's look at the economic data coming up this week. Nothing that will be nearly as eventful as what we saw last week, unless there's something strange out of left field. But tomorrow on Tuesday, we do have retail sales ex-auto. The expectation for that is actually for retail sales to improve. So for the month of April, month over month, it was flat. Expectation for the month of May was it was a positive 0.2%. Same expectation for retail sales ex-auto, positive 0.2% for May, and that's what it was in April. So the rest of the week, we have a few other indicators that come out. We have 3 primary housing indexes: building permits, housing starts, and existing home sales. I won't go over the numbers because they're pretty boring. Expecting almost no change over the April levels for all 3 of those indicators. So that's it. Short week, certainly in terms of economic data coming up this week. So that's all we have for you this week. Thank you very much for attending. We hope to see you again next week. Thank you.